started off on a pretty positive note, but since then it's been a bit of a reversal from the highs.
The deposits are down 0.03% sequentially.
Then below that, you're looking at 24,056 for the Nifty. 24,240 is where we are at.
Growth is holding steady in 2023, 2024, 2025, around 3.2%.
For the overall business of the company this time around, in the first quarter, there has been a growth of 27%.
For the markets per se, at the index level, we're holding up pretty okay.
Volkswagen has shown an intention to go ahead with the partner, that is Mahindra Group.
Ultimate target is obviously to dilute our share from Siemens Energy down to zero.
The mid caps, they continue to do well. Most important thing, of course, will be pricing of this this particular vehicle.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Okay, that is the day so far, and this Friday seems to be a little tepid. And as we sort of came into the studio, sat down, mic'd up, etc., market's taken a little bit more of a tumble. We were down about 40 points. We were down 80, and we're down about 70, 75 now. So, we'll track things, but in the broader market, there is a lot of momentum on the positive side, a lot of bullishness, and a lot of stocks that we want to really talk about. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant Rima Surubi here, and Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon. When you talk about a 20-30 point news in Closing Bell and you begin that, it's largely been a quiet day, right? Because typically we come out and say, oh, look, in the last 30 minutes as I mic down, there's been a 100-point move. So it's been a sort of a ho-hum day.
Yeah, that's true. And I think the bulk of this week, we spent a disproportionate time discussing one stock, HDFC Bank, and I'm sure we'll do it again today, and we'll tell you why in just a bit.
Well,
Sorry, go on.
On the positive side, though, I think the broader markets are still well in the green. So I guess portfolios may not be feeling that impact of what's going on in the headline index. So mid-cap index is well in the green. More number of stocks advancing and declining. Not so bad, I guess.
Absolutely. Okay, so let's kickstart the show with the news that the market right now is nursing losses at the headline level. About 82 points down on the Nifty. And like I was saying, it's, banks once again that you can blame, and largely speaking, HDFC Bank. So whatever excitement we had because of the FPI headroom and MSCI possibly increasing weight, today's a completely different day. And now blame it on the business, blame it on that update, because we saw weakness come in on both on the deposits front and advances. So basically, it's been lackluster. And on the core business, this update tells us that, all is still not well. And therefore, that sell-off is very apparent on HDFC Bank right now. It's not HDFC Bank alone. That's led to a bit of a sell-off on some other banking names that have had a good week so far. ICICI would be a case in point. And then you have some more weakness in an IndusInd thereabout. Some IT stocks actually on the back foot as well. So that explains a bit of the red.
It's if you had to, this HDFC Bank outsized impact, if you look at the Nifty Bank. I looked at the Nifty Bank, it's down 1%, 1.25%. That is basically what, some 400-500 point cut. But HDFC Bank, in terms of index point contribution to the Bank Nifty, it's negative of almost 900 points, single-handedly. So it's everything else pulling in the other direction, mostly everything else pulling in the other direction on the Nifty Bank. And of course, stocks outside of it, outside of the Bank Nifty index, maybe up as well, maybe down as well. But in the Nifty Bank, it's HDFC Bank. All right, Nifty, in the morning, we had a bit of a cut. It took support at the 40-hourly average, which is 24,150. You check out the day's lowest point. There's a support we put out in the morning as well. It's about 24,160 or so. So we almost got to that hourly average, and then we sort of have had a bounce. Mid-cap, small-cap indices, each of them about a 0.75% gain. And if you look at sectors, PSUs, actually it's a strange mix because there is FMCG and pharma, which are as pockets doing very well. And then you've got the RailTel and the Aircon and the, defense names and, whatnot. Some New India Assurance, a whole swath of PSUs which are really leading, and you can spot at least 8-10 of them if you just sort them gains by what's going up on volume. So big volume-led gains once again on public sector stocks.
You know, I think the fact that we're getting away with a 0.3% cut on a day when HDFC Bank, with an 11% weightage on the Nifty, is now down 5%, is not so bad as an outcome. Pull up the contribution plate. On the Nifty Bank, as Prashant said, it's a 900-point impact. But on the Nifty itself, HDFC Bank has shaved off close to about 150 points. There you have that number. So single-handedly, it's pulled up, and yet, okay, the markets are, managing to get away with a little bit of a cut. But I think the Bajaj Auto press conference has begun, so let's cut across.
Attractive price of 95,000 rupees. To begin with, Freedom 125 will be immediately available in Maharashtra and Gujarat states, starting with the disc LED variant, followed by the drum variants in a month from now. Freedom will be made available to all other states in the country in a phased manner by early next quarter. Bajaj Auto is the world's most valuable two-wheeler and three-wheeler company. It is possibly the only company which can marry the deep expertise of motorcycles and CNG technology. With Bajaj Freedom, the world's first CNG motorcycle, we have a pioneering innovation for the Indian commuter. We made the motorcycle, now you make history. Thank you. I would now like to invite Mr. Rajiv Bajaj, our Managing Director, Mr. Rakesh Sharma, Executive Director, Bajaj Auto, and Mr. Ebrev Joseph, Chetak Technologies Managing Director, to come on the stage for a question and answer session. We are now open for a Q&A session. Thank you.
Okay, we'll get to that when Rajiv Bajaj, starts with the Q&A. But for the markets per se, we spoke about HDFC Bank. For the week, the Nifty is up 1%, while the mid-cap index is a 2.5% gain. And the large-cap indices are on track to close higher for the 5th straight week in a row. Titan is also another big drag today, apart from HDFC Bank, where Kotak has downgraded the stock to a reduce. And Titan will also be one of the top Nifty losers for the week, with a cut, a significant cut over there. Pharma and CPSE index is, the two spaces which are batting for the bulls. So the Nifty Pharma index up more than 1%, the CPSE index too up 1.5%. And if you just tally the performance for the week, it's a lot of IT. So Infosys, HCL Tech, Wipro make it to the top 5 Nifty gainers for the week, with Infosys up 5.5%. Throw in ONGC, which has had a big up move today with the rise in crude prices, and Sun Pharma in the pharma pack is up 3.5%.
Yeah, absolutely. So you still have the gainers. I mean, if you think it's a dull market, please just look away and look at the PSU screen. IRFC, RVNL, Aircon, BEML. We're talking once again 7%, 8, 9, 10%. So the PSU party really on this Friday. Nigel.
Well, all right, let's get Mitesh Thakkar then. He's back into the conversation. Mitesh, it's a bit of a down day, but as, Prashant, Rima, as well as Surbi said, it's HDFC Bank on one end and everything else on the other end, because ex of HDFC Bank, actually the headline index would look much better. So give us a view on HDFC Bank first, technically, and then you can tell us about the Nifty.
HDFC Bank, made a fresh high and has come back, which is a very strange pattern, but then it's now at the support areas. I think the 1640, 1635, 30 zone, I think it should be the area where the decline should get arrested. Otherwise, I'll get out of this stock and, suggest people to maybe prepare for a bit more of decline. So it's right at the support. Let's see if it reverses from here. I would hope it will. And on the index, I think, the PSUs, I think, have kind of put their hands up today and prevented the Nifty from breaking below 24,150, 24,100 zone. That still remains the preferred buying area. On the stock side, ICICI GI is a buy with a stop at 1840. Look for targets of around 1930 here. And IGL after 3-4 days of consolidation could be interesting. So buy this one around 512, 510 zone with a stop below 500 for a target of 530.
Okay. Prakash Diwan is now with us. Prakash, what's flashing on the screen is the price point for Bajaj Auto CNG bike, 95,000. You track, you're an auto enthusiast. So tell us, what have you made of the price point? Is it very competitive? Is it going to be disruptive as Bajaj Auto believes it has the potential?
Good afternoon, Rima. So it definitely is something which is not going to be very easy for competition to ignore. It's right there where it makes the capital cost very affordable, while we do know that the running cost is going to be far more competitively placed than any other fuel that you would opt for. What's going to happen is people are going to wait for its versatility in terms of, how does it work across distances, across speed bands. So some of that data is something which everybody would want to know, because there's this general apprehension every time there's a new product in terms of performance. Because you're spending almost a lakh plus, you would not want to kind of, keep changing this acquisition very soon. So from that perspective, the moment the performance metrics are in place, I think it will become fairly disruptive. And probably the company is also looking at testing things out before they probably, make some major changes and launch higher price variants. So very good strategy. I'm sure it will be received well.
Now what, Prakash, I just want to point out, the Hero MotoCorp has suddenly nosedived. This happened immediately when the pricing came out. And this is a bike, which is, I think, getting priced almost exactly at the same level as where some of Hero's entry-level bikes are. I did a quick scan on the internet. So the Hero Extreme 125R, the prices start at 96,806, and Bajaj's bike, let's get the flashes back on. I think 95,000 is the starting price for the Freedom, as it's called as well. So the market impact is immediately visible. Now, Prakash, this is a bigger question, right? Bajaj has always taken pride in being the major player and the market leader in the premium end. 125 plus and then 150 plus is where they've always spoken about, domination. But I remember our last conversation with, the Bajaj management, where they were saying they do want to make some inroads in the entry level. So now 125cc, is this a battle that's heating up?
No, absolutely. In fact, it's the most price-sensitive commuter segment that you're talking about. And that's exactly why Hero is responding or reacting negatively, Surabhi, because that's their mainstay bread and butter, apart from the Charisma and allied variants. Bajaj is making inroads, will be potentially making inroads with the CNG bike in a way which is very broad-based. And remember, unlike electric vehicles, CNG is far more easily available in most tier 2 cities as well in India. And this becomes the go-to option for people who want something which is affordable in terms of operational costs. So if the capital cost remains more or less same as your closest available option, when the operating cost is far, far lower, you probably get the right combination. So I think they should be able to do well. It's just that the performance metrics have to now validate this or endorse that, and the acceleration will happen. The buying acceleration will happen once that is out and that's in place.
Okay.
All right. We'll, Prakash will come to you with more questions in a bit. But our colleague Parikshit now gets us a sneak peek of all the key features of the new bike. So let's watch.
You may think I'm sitting on any normal motorcycle, don't you? Well, this is actually the world's first CNG motorcycle by Bajaj Auto. You don't believe me, do you? Wait a second. Take a look. Here you have a CNG cylinder, and that proves my point that this is the world's first CNG motorcycle. Here you actually have a 1.8 kg cylinder fitted inside a motorcycle. This configuration took a long time. It's taken 2.5 years of hard work by the company and its R&D team to put it together. It's an absolutely new ground-up motorcycle developed from scratch. And with the CNG cylinder, you also get a fuel tank right here. So you've got a 2-liter fuel tank and a 1.8 kg CNG cylinder right here. So that was a preview into Freedom NG04, the latest offering by Bajaj Auto. They hope this will be a big disruptor in the Indian automobile market and abroad. Let's see how the customers receive this vehicle. From Bajaj Auto's R&D and manufacturing facility here in Akudi, Pune, with video journalist Balbir, this is Parikshit Luthra.
All right, well, that is a sneak preview, a quick look at what the new product actually looks like. And it's, you know, the point is, and Surabhi was talking about the comparison with Hero and the Hero stock selling off. The simple thing is that, you know, the competition does not have a product. This is the first ever product this kind. The price point is, of course, one thing in terms of how much it costs. But I think the selling price is essentially going to be the cost of running the vehicle. CNG prices as opposed to a regular sort of, petrol bikes out there. So I think that's going to be a big push, and we'll, I think, hear from Rajiv Bajaj in that Q&A when he'll take questions in a bit from now. But let's address other stuff as well, and we'll come back to Bajaj Auto in a bit. Thermax is something we want to address. The stock is surging in trade on the back of fresh order wins. Vamakshi is here with a quick sort of detailing of this. Vamakshi, over to you.
Well, absolutely. Thermax is trading higher today, and that is because its arm TBWES has received an order worth 513 crores from a leading industrial conglomerate. In fact, they will be setting up a 600 megawatt greenfield energy project in Botswana, Southern Africa, and they will be supplying two 550 TPH CFBC, which stands for circulating fluidized bed combustion boilers, over the next 23 months. Now, keep in mind that this order is the first order that has come through for the company in this quarter itself. This is the first order win announcement that has come through from Thermax. And as of quarter 4, they had reported muted order inflow. They missed their own internal expectations for FY24. Order booking was up only 6.5%, and the order book was up at nearly 4% for the year. But in fact, in the con call itself, the company had said that the order inflow was muted, and this was mainly on account of lack of large orders where the pipeline was showing improvement. H1 FY25 was expected to be better, and the inquiry pipeline, however, they said was materially higher versus when the year began, and they were expecting conversions to start through post the elections. So therefore, this is the first order win that has come through this quarter that the company has announced, and therefore we have Thermax in focus today.
Okay, all right, Vamakshi, thanks a lot for putting that together. Prakash, what do you make of this one? You know, as we speak, actually, when this news piece had come out, the stock was up 2-3%, but right now it's up close to 6%. Your view on the stock?
No, absolutely, Nigel. This order, while in absolute terms may not make such a big difference beyond a few percentage points on the earnings potential, but what it does is it kind of starts opening up a whole new stream of orders that potentially they can do. Remember, Thermax as a company has evolved so much from its original, solutions that it used to do to the new age solution that it is providing. And given the fact that there's so much of talk around power consumption by data centers and all of that, and cooling solutions and things, all of these companies will have a huge opportunity to get into new greenfield revenue streams. This happens to be probably an indicator of that. So that's why the market's liking it. And I believe in terms of capabilities, this is one of the best in breed companies that you would ever have. So if you want to play the thermal management vertical or thermal management sector or segment, if you will, then probably this happens to be a good, never been overvalued, always trades in a reasonable band. Of course, given recent moves, you might argue against that reasonability, but I would believe this is a stock that will probably do very well in your portfolio from the long run, given the pedigree and the kind of product solutions that it has.
I just want to highlight CG Power as well. You know, Thermax is one. Look at CG Power has been consolidating for a while. I mean, it had a bombastic move, but then for a while it did nothing. Today it's up 7%. I'm not sure if there's any specific news flow here. The last sort of news which came, news in terms of new venture, etc., has been, of course, you know, talk of that OSAT venture, semiconductor OSAT venture, which they're investing into. And there has been some buzz for a while that there is perhaps an acquisition coming in Tube Investments or CG Power. We don't know, but we'll see. But, you know, whether it'll be housed here or there, but in the transformer space. So that's something to watch out for. Otherwise, you know, Cochin Shipyard, once again, 6% move. You know, it's almost at, 28.38. BEML is up 10%. So defense is clearly out there. Data Patterns is up about 6.5%. There was a tweet of Defense Minister Rajnath Singh. He basically talked about some numbers in terms of defense production in India in FY24, a lakh plus crores, and that being the highest ever, and how they plan to make India the global defense hub, not just for sort of captive use, but also supplying in terms of an exports opportunity. We actually had the Jefferies analyst this morning, and she was also she made a point about the export opportunity, which perhaps markets have not paid too much attention to. Just a quick word, Prakash here, out of the names that I mentioned, anything you like?
No, to be honest, they're all not just likable, they're all lovable given the business potential. But then current prices really don't leave too much of value in terms of what they need to execute now to justify these valuations. Again, as I said earlier, the sector is promising, growth is assured, but the pace of growth is something which you know, we are kind of getting a bit ahead of ourselves in terms of anticipating. So I would wait for that to happen or the prices to soften a bit. But you know, especially the shipyards, the Mazagon docks and the Cochin shipyards and the GRSCs of the world definitely have enough from a visibility and order book position. I would not read too much into smaller companies like MTAR or Data Patterns, which also are kind of, you know, clamoring for some sort of a re-rating. But these large companies which are asset-based, with huge entry barriers and moats, definitely makes sense. But at softer valuations.
Kind of sort of not reminds me, but sort of connecting what you said about not lovable or even likable valuations in that sense, Prakash. I don't know if you've been reading some of the notes from Kotak Equities, Sanjeev Prasad's latest note on some of the, I think it's called busting some myths. So he's kind of taken pot shots at assumptions and narratives and stories. They've been trying to do it, and I think they've got a, and people have, of course, I mean, because the markets kept on rallying. But I liked what someone said, Anand Sridharan of Nalanda Capital. I think he was referring to Sanjeev Prasad's latest note. He said, well, a thoughtful analyst in a thoughtless market. I don't know if you'd go that far, Prakash.
No, absolutely. I do agree. You know, anybody who's going to be a voice of caution in this market, in the way the markets are racing ahead, would probably be proven wrong and be laughed at. But then, you know, given a slightly longer time frame, there could be things which would reverse. And you'll probably start seeing merit in some of the caution as well, Prashant. So I believe I belong to the camp where I seek value. I'm not a very big momentum or growth player as yet. But if you were to seek value in some of the sectors and scripts, you will have to definitely wait on the sidelines because there's none that's very clearly emerging. So, you know, some of the IPOs which have recently got listed, and mind you, they've done exceedingly well after listing. You know, so those are areas that you could find value. But otherwise, the market definitely is a little bit over topish in terms of valuations for all the favored sectors.
You know, the last 10% plus drawdown on the Nifty was way back in July of 2022, 2 years back. And since then, we haven't had a meaningful correction. We had a mini one on the day of the election, but that was just perhaps, you know, a one-day flash in the pan. But let's talk about Shilpa Medicare. That's rallying as the company's CDMO customer has reported positive results from a clinical trial of a new molecule for the potential treatment of a chronic kidney disease. Vivek joins in with the details. Vivek.
Well, good afternoon. Shilpa Medicare clearly doing very well in the session today. This on the back of the fact that the company updated the exchanges last evening about one of the customers for which Shilpa Medicare provides CDMO services to. The name of the customer is Unicyve Therapeutics, and this particular company reported positive results for a pivotal clinical trial of OLC. This particular NCE molecule, which is the new chemical entity molecule, is used in the treatment of some of the side effects that patients who are suffering from chronic kidney disease actually suffer from. So this particular entity, clearly has a significant market potential as well. What is Shilpa Medicare's role in this particular or in the value chain? Number one, they will provide the entire CDMO services. They will also be developing and supplying APIs as well as a finished dosage form. Along with that, Unicyve has already gone ahead and given Shilpa Medicare, one set of orders to provide the OLC tablets, and there is also a commitment to go ahead and buy from Shilpa another set of tablets, and this particular timeline too has been given by the company. Not only that, Shilpa Medicare will get paid for these services, but also interestingly, the company will be receiving a $10 million milestone payment, which spans over filing, approval, and launch of the product. Clearly, a positive development for Shilpa Medicare, and the stock is clearly reflecting that.
A 15% higher, so that's a big one coming through right now. We'll take a quick commercial break. Markets, by the way, have fallen again. We are down 91 points. So, at about 2:30 we were there, and there was a bit of a pullback, but we'll see. The low today is 24,170, 168 to be precise, but we're not there yet. We'll just leave you with Bajaj, which is up about 2%, so it's moved about 1% since the last time we sort of looked at it. That press conference with Rajiv Bajaj, you can see him speaking on the side box, is still very much on. And we look at Hero as well, which is, I think, recovered a little bit. It's down about 1.4% or so. So that story playing out right now. We'll take a break. We are back. Nimesh Chandan of Bajaj Finserv Asset Management will be with us on the other side. Stay tuned. No. He's shot with, he's done a walkthrough.
Oh, with Rajiv Bajaj. तो वो ले सकते थे वो यार.
नहीं, but that is not, there is a message saying that you can only play it after.
Oh, embargo.
After the press conference. After Okay, welcome back. We have the market, which is selling off a little bit more. about 90 points. 24,200 is where we're at. Market breadth is still positive. 1,500 stocks are higher, and you got about 1,200 stocks which are down. And what is going up has got pretty much bulk of the volumes out there. Nimesh Chandan is with us from Bajaj Finserv Asset Management. Nimesh, good to have you with us here. I think we've had you in the studio the last couple of times, and good to chat like this as well. Just a quick word, Nimesh, on the move that we are seeing on. I know that you've had a positive view on capex and sort of infra and those kind of plays, and you think the runway for growth is long, but some of the moves here are really something astounding. Can one justify a 300% move in a stock? Whatever the news flow, whatever the positives. I'm talking about Cochin Shipyard. Just to take one example, for example. And it's not, by the way, 300%, it's 310% now with today's gains. What's the sense, Nimesh, on two areas actually in the infra space? One is defense and the other is power. Yeah.
Always good to be on your show, Prashant. And you're right. In our indicators now, we are seeing that the overall market has moved a little above fair value. This is the large cap companies. Mid caps and small caps are about 25% to 30% now above their fair values that we calculate here at Bajaj Finserv AMC. So very little value left in the market. Most of the news or positives are discounted. While capex continues to be a good long-term story, there are some pockets like power, for example, is still a mega trend that we believe in. But valuations have now captured a large part of what we will see unfolding over the next few years, maybe next at least 3 to 5 years. So valuations are getting discounted, positives are getting discounted. In some sectors, like you mentioned, defense, because the number of plays that people have are very few, typically you see a very exaggerated move in those companies, and that's what has happened, that the valuations of those companies have moved significantly higher because people had very few stocks to invest in to play that particular theme. So we are looking at some contrarian picks, and even after the election results, we think now is the time for looking at the consumer space, looking at some of the contrarian bets, like, for example, chemicals. So we are positioning ourselves to be a little more contrarian and expecting some correction coming in the market anytime.
All right. Hi, Nimesh. Good afternoon and good to see you. Nigel on this side. I recall that call you made on chemicals, actually. And now a lot of the street is coming to terms with that maybe the second half of the year is going to be far better, both on pricing and demand. And also some of these companies have been looking at that backward integration. The benefits will start flowing through as well. What do you like from this space? And do you believe now we are towards the end of that, those EPS downgrades and things will look up?
Hi, Nigel. So you are absolutely right. We have been accumulating, or we have been positive on chemical stocks for some time in our portfolios. This market, it has a lot of investors who have very little patience. So people are not very happy when they hear that 1 quarter or 2 quarter of a long-term good business will be a little moderate or mediocre. So they are avoiding some of these companies and stocks. And for investment managers like us who have a long-term investment philosophy, these become very good picks. Chemical sector has some fantastic companies. They've got encouragement from the government in terms of PLIs to expand capacities. Globally also, they are increasing their market share. So we've seen till now some revival in volumes in some of the specialty chemicals and especially dyes and pigment chemical area. A little slow on the agri-chemical side. Second half is very critical to see whether this volume growth will turn into price growth, and then the next leg of re-rating may happen for these companies.
Right, Nimesh, got that. So that's on the chemicals front. Want to get your take on financial services, because we're in the midst of getting all of these quarterly updates, and it's quite interesting actually looking at the data and the market's reaction. I mean, I'm just giving examples. I know you can't get into individual stocks, but for instance, Bajaj Finance came out with what looked like a robust number at 30%. the market kind of took it in its stride. Today, HDFC Bank's slightly, less impressive number is seeing a very sharp reaction. Most of the banking names that at least I've seen, I mean, deposit growth is actually fairly lackluster or negative. So just on financials, because, everyone's waiting for this big move to take place on large banks, what should we be prepared for as we start looking at the quarterly numbers?
See, I would stick my neck out and say that in the BFSI space, you can find good value picks at these levels, because many say on the banking side, you are seeing many banks which can sustain their ROEs above 16% are available at a 1.5 year or 1 year forward basis of 1.8 to 2.2 times price to book. So that's an attractive valuation according to me. Cost of funds is likely to start moving down as interest rates start coming down. This will help the NBFCs also. Of course, the growth in NBFCs will depend on which segment they are present in or dominant in. So selectively, NBFCs can actually see a good growth from here and with good valuations. So it's a good time to pick in this sector. We are also bullish on the insurance side, where we believe that life insurance is now attractively placed. Even the growth in general insurance is better. For the overall credit in the market, we've seen credit growth in the banking sector coming down to about 13%. So we expect it to be around 12 to 14% for the rest of the year. Even the deposit growth would be around the same level. So that stark difference between credit growth and deposit growth may actually narrow down substantially. So this is the area where one can look for good long-term picks. And yes, some of these companies may have their own specific issues, but I don't believe that the entire sector can be painted in one brush, but there are a lot of value picks here.
Nimesh, hi. You said you're expecting some correction in the market. What is it that you anticipate? What could perhaps, be the straw that breaks the camel's back? Because valuations have been high and still money is flowing in. Is it going to be some earnings disappointment, something on the global front? What's the, construct, the macro construct, which could precipitate a fall?
When one tries to be a contrarian in this raging bull market, one may look stupid for some time or foolish for some time. And that's the risk we carry. Being early sometimes looks like being wrong. We value the markets on fundamentals and behavioral models. These are proprietary models we look at. You won't believe last year when we launched our funds and the market was at 20 to 21,000 range, a lot of investors told us it's an expensive market, you won't make money here. Now at 24,000, when we say we expect a correction and the markets are slightly over fair value, people again don't believe us. People feel that, okay, markets can continue to rally from here. We've seen good rally. Possibly the negative news can come from certain international pockets, maybe a sharp slowdown in the US, continued slowdown in China. There could be some disappointment at the pace at which people expect the inflation and the interest rates to come down. So those can be the triggers. Typically, when there is some slowdown in economy, global economy, you will find some earnings downgrade coming in. And in a market which is priced to perfection and expecting high earnings growth, even a small disappointment can cause a correction. I'm not bearish on the market to say we are in a bear market, but this will be a correction or an interim top in a good long-term bull market in the country.
Okay. When you say this, Nimesh, this is what, 2% away, 3% away, 5% away, or we were already there? What's the?
So it's the technical definitions of correction start from 2% to 20%, Prashant. So
no. I'm saying forget about the correction. That can be. I'm saying you said interim top. So you're saying that, I said this could be an interim. I'm saying is it we already there, or you think it's some distance away even from here?
Difficult to say exact top, but Prashant, the signs are that we are around this level where we wait for some time.
You've increased your cash holding, or where is it that you've booked profits?
So we have certain funds where we work according to our view on the market. So our Balanced Advantage Fund takes a combination of fundamental and behavioral indicators and allocates money based on that. So we have reduced our net equity allocation in that fund right now. We also have a multi-asset fund where we are on the lower side of what our equity holdings would be. In some of the other funds where, say, a flexi cap or in the large and mid cap fund that we have, we don't take cash calls, but we would want to be in areas where we see less froth in terms of valuation, and we find attractive models of businesses which are going through some short-term pain. So some contrarian bets we pick up.
All right. Got that, Nimish. It's been a pleasure speaking with you. Thank you so much for joining. And I think a word of caution is really warranted at times. It's good to take that on board as well in a market like this. You have a good weekend. Look forward to connecting again. Well, we do have to take a break, but as we do that, it's a very, very special day. It's a day to remember legendary Indian investor Rakesh Jhunjhunwala. It is his 64th birthday today, and the street will always remember him as the big bull, not just in the market, but the big bull on India.
So, I mean, imagine, right? If he were around, he would have been on the air, thumping the table, right?
Yeah.
And it's kind of strange not having him around on big milestone days, and 21,000, 22,000, and 80,000 on the sensex, and I think we've always had him, so that's something we miss.
And now that I look back and think, he was the one who was always thumping the table years ahead. Years before this domestic liquidity boom, this revolution that's completely changed the fabric of this market. Well, before it started, I think he was the original bull who believed in the story.
Absolutely, and through the depths of COVID, actually, right? I mean, he was steadfastly sort of bullish and believed in the India story more than anything else, more than stock. I mean, this stock or that stock. Believe that there is a long way to go as far as growth is concerned. We'll just play out a snippet of the conversation from one of his last interviews on his vision for India. We'll take a quick commercial break here. We'll see you on the other side.
I think India is going to enter a golden period. I see India growing at 10%. We are entering a golden age. I wish my fellow Indians were as optimistic as I am.
Welcome back. You're tuned in to Closing Bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, for the time being, in the last 10 or 15 minutes, the Nifty has seen a big recovery. So from being down close to around 90 points, we're up 40 points. What's moved? The big boy Reliance Industries, that's come out there to bat, and that's single-handedly taken the Nifty back into the green. So the intraday chart should come off you. Big up move is what you've seen, and the tech-related names. We have the jobs report that comes out later today. And normally on tech and metals, getting into a jobs report, there is some optimism that maybe the number doesn't look so good. which means that the Fed will have to go ahead and cut rates. That's at least the optimism. And the tech index that was actually down, that's cut its losses dramatically. So Reliance Industries, tech cutting its losses, and HUL, that has a relatively larger weight on the index. And when that moves up as well, it helps the Nifty. So that's the reason why we're back in the green. But let's get in Nimesh, who's back with us this week. Nimesh, good to have you back. Tell us, what are you picking up in the D Street action today?
Well, Nigel, a day of consolidation, so to speak. And again, if you look at the markets today, as you rightly pointed out, a big recovery in Reliance. So while HDFC Bank is dragging, there are other large cap names like Reliance, ITC, for that matter, some bit of tech names as well. Yeah. They're helping the bulls to have this, so kind of Nifty is getting managed at these levels from some other large cap boys. But the good part is this whole rally of the last few days is backed by FI buying as well. So we're seeing delivery-based buying happening. That's been the case today as well. In fact, there is a basket buying in the Nifty stocks, is what I understand at a leading FI desk. So, and it's basically spread to some mid caps as well, and that explains the big outperformance in the broader market stocks today. In terms of sectors, clearly pharma stands out in terms of big moves in those sectors. Some of the select PSUs have again started doing well. Remember, there is a phase now when the energy fund from ICICI Pru is just got launched, right? So that is up for subscription till 16th. So you'll see some bit of action in the energy stocks as well, as and when that fund gets closed. So there is a bit of interest back in the PSU names, so to speak, from larger institutions. But broadly, this whole rally in the large caps is backed by FI buying as well.
Okay, all right. And what about individual stocks? Plenty of action out there. The promoters cannot sell because most of them have got into a silent period, but still
there are blocks happening.
A lot of
right?
blocks. Yeah, tell us more.
So again, a couple of stocks where there were large blocks and they're in action today. The first is Bet Plus. There is a large block and the stock is under pressure after that. But I understand a leading domestic mutual fund was a seller there. So again, disclosures could be interesting. But the bigger one is HEG. Almost 5% equity has got changed hands. Well, the stock is recovered from the day's low. Need to see, in terms of disclosures, whether there is some official disclosure to that. I was just looking at the shareholding pattern. There is only one mutual fund, which is Quant, who owns a sizable stake in that particular company. So again, disclosures could be interesting there in HEG. The second stock is Suzlon. A big move on that stock and backed by large volumes as well. I understand the flows are quite strong at a leading FI desk. So looks like the FI interest is back in this particular stock. And also there is a lot of anticipation that maybe the company is likely to bag a very large order very soon. So that's Suzlon. The third stock is HOEC. Post the disclosures which came 10 days back, that stock is back in action, has recovered as well very sharply. I understand some leading HNI investors quite active buyers as well, and hence a big move even in today's market. And the last is Gujarat Fluorochem. The stock has been in a consolidation phase, absolutely flat if you look at like a 3-month or a 6-month chart. But now at these levels, some bit of interest seems to be back from larger HNIs. And even there, the anticipation that maybe over the next 1 quarter or so, you will see the company raising funds in the EV business. So that's a potential taker for Gujarat Fluoro.
Nimesh, good afternoon. Good to see you back. On Reliance, you had the opportunity to sort of make a call or two, figure out what's going on?
Not surge. Really, Prashant. So again, the fact that Reliance has actually underperformed for a longish bit. Now I think there is a bit of nifty management as well. The day when the HDFC Bank is down or some other large caps are down, Reliance puts his hands out and rallies pretty hard. There is buying interest as well, largely. And again, the telecom stocks have seen some bit of consolidation, and now maybe there is a fresh buying as well. So that explains a bit of movement in Reliance in today's market.
Okay, all right, Nimesh, thanks very much for that. So that's a quick look at things. I mean, which, the Reliance's 2.5% move basically means that the Nifty has also seen a vertical rally, almost coinciding with, you can pretty much put both charts together and look at the Nifty move as well, a similar kind of move. So 257 onwards, just like one-way sharp rally. There you go, on your screen. Cut losses and into green by about 40 points or so. Mitesh is with us. Mitesh, quick word on what we're seeing right now, all thanks to Reliance.
Prashant, I think, a very good setup for me on Reliance. Earlier when the breakout took place before the day of tariff hike news came in, I talked about targets of 3250, 3300 as a minimum and possibly 3500. So then the stock had a big breakout on the day of tariff hike announcement, and then last 3-4 days has been giving a consolidation kind of pullback sideways activity. I think it's picked up again. This is definitely heading towards 3300 plus levels very soon, and maybe, as I said, 3500 levels. So very positive out there. Use declines to buy into this one.
Thank you, Mitesh, for that. By the way, IT is also playing its part, and the run-up in IT continues. Pull up that Nifty IT one-way up move in the stock. We just want to caution the way IT has moved in the last 1 month with a rally of about 15-16%. That means there is a risk that if there is an earnings miss, then it's just the negative reaction could be that much more sharper given the up move that we've seen in the run-up.
Well, is that even surprising, Rima? Isn't that the pattern? I think the last 3 quarters, that's the pattern. You drum it up, you run up in anticipation. And then best cases, companies say, okay, it's not getting worse. It's the same. And then you sell off.
But you know, last time there were so many earnings downgrades after the Q4 earnings because of the muted guidance. So some companies like Infi and Wipro had seen up to a 15% cut in the EPS estimates for FY25. UBS had done that analysis. So at least that this time they're saying is not going to have. Even if you don't see upgrades, at least the downgrade cycle may have come to an end and we could see a stable narrative from here. But Amrish Balika is now with us. Amrish, before we get to other stocks, first let's talk about Bayer Crop, the stock that you are tracking and you're recommending.
Yeah, Bayer, I mean, that's a subsidiary of the global agri giant. I mean, they have a range of products and services, right from crop production solutions, seeds, digital farming technologies, and they also provide drone services to the farmers. Approximately 44% of the company's domestic sales comes from their top 5 products. And the focus is clearly on research and development plus collaborations with local farmers. And as far as corn seed is concerned, they are the leaders. And corn is currently being also used in ethanol production. India's average farm yield is much below global average. And globally, I think the main issue right now is food security. And that's going to be a huge issue going ahead. So the yield per acre has to go up, which again is the focus for Bayer. They have a robust balance sheet and a strong dividend payout record. I'm expecting the revenue CAGR to be about 15% for the next 3 years, the PAT CAGR of about 30% again for the next 3 years. So expecting an EPS of 275 for FY26, and my target here is going to be 8,250.
Okay, so that's Bayer Crop Sciences. Amrish, hi, good afternoon. Good to have you on as always. I just wanted to get your sense on this Raymond demerger that's underway. They'll be segregating the real estate business, and we can see the hoardings, the billboards all over Mumbai, right? Raymond Realty. What's your sense? I mean, otherwise the market has a huge appetite for all things real estate. I mean, the stock's done really well.
Exactly.
But how would you look at this one?
I think it's already moved up. I mean, once that, those rumors were out, and then after that the news was out, I think we've already seen a huge move as far as Raymond is concerned. I mean, the last couple of months it's already doubled. So yes, I mean, because of this demerger, there can be some more upside, but at these levels, I'll not really go out and buy fresh. Maybe once the demerger is done, I mean, looking at the real estate, the stock, as and when it's listed. I'll take a fresh call, but right now at these levels, I think it's more than fully priced.
Amrish, do stay on. We need to slip into a mandatory break before we wrap up the day, the week. So stay with us. The Nifty is holding up in the green, courtesy Reliance Industries, and a sharp up move in IT stocks. Welcome back. It's not just Reliance Industries, even Jio Financial Services has seen a spike up, and the unabated, relentless rally continues in PSUs. IREDA is the last one to get to see that spike up, 4% up on that. Hudco, a stock which has moved up more than 400% in the last 1 year, has added on another 1.5%. NBCC has seen some buying in the last 30 minutes. So PSUs are very, very active. And we kept talking about how banks are struggling today, led by HDFC Bank. PSU banks are actually having a good session. The Nifty PSU banking index is up 1.5% at a time when the overall sector, the banking sector, is down 1%, with Bank of Baroda up 1.5%, State Bank of India, PNB. So the entire PSU lot is actually holding up pretty okay. And even PNB's Q1 update was fairly healthy. Amrish, one stock I wanted to get your view is on Kaya. Second day in a row, locked in an upper circuit of about 10%. Yesterday, they announced that exclusive tie-up with Marico, where Marico will now distribute market Kaya. It looks like a game changer, 20% in 2 days. Where from here for Kaya?
I think because of this, possibly we could see some more upside as far as Kaya is concerned, possibly levels of about 650, 675. But I'm just wondering, I mean, this could have been done earlier. I mean, why now? But I mean, like, it's better to be late than never.
Okay, that's Kaya, 2 days of circuit on that one. Amrish, what else? I mean, we always talk to you about this whole PSU basket. It refuses to die down, the buzz over there. Even railway stocks, defense stocks, shipbuilders, you name it. Anything fresh that you are, willing to go out there and buy?
I think it's already being overdone. I mean, I'll just give you one example quickly. I mean, a stock like IRFC. I mean, I was trying to sell that very hard to investors at levels of about 25, 26. With a price target of 35, 36, maybe the maximum price target of about 40 to 45. And that stock from there, it has, run about 8 times, 9 times. And if you look at the story, nothing much has changed. I mean, like the performance is more or less similar. I mean, they are growing at that 25, 30%. I think the only thing which has changed is the story as far as the railway sector is concerned. And this is, connected to railway sector, and because of which we have seen this move. So I think most of these stocks are going up on stories as compared to the basic fundamentals at the ground level. So I think there's a lot of froth. This does not mean that one has to sell out and leave the markets, but one has to be very careful at this point of time because of the sort of froth which has built up, especially in this space.
Lots of new initiations as well. And I think Ambit yesterday initiated on a stock called TARC. It's a real estate company. I think it came out of Anantraj. And it's up 6% today. So it's not as if, the stock's not done well. It's not well. And it's doing even better now. So closed at 50 rupees, I think, last year. And at about 233. And that initiation, of course, only came in yesterday. So it's okay. I think I'm looking at okay. That is Anantraj. I'm talking about TARC. I don't think we have it in the system, but it's a small. I mean, the Ambit, of course, is pushing it as one of the top residential real estate place. That's the one. So 233 on that one. In this space, Amrish, anything at all? Real estate, not the bigger ones, but anything. There's Century Textiles. We were talking about Raymond earlier. There's this one. There is Max Estates. Anything?
Well, among the smaller ones, there is a stock which is about 1,500 crores of market cap called Arihant Superstructures, which again I've been recommending for a while. It's already become a 10-bagger in the last 4 or 5 years. But still, there's some more upside because they have about 10 to 11,000 crores of projects which should be delivered over the next 6 to 7 years. And a company which is going to deliver that much of projects over the next 6 to 7 years is available at about 1,500 crores of market cap. I think it's still decently cheap because it's still not much on the radar as far as the investors are concerned. So when in a market like this, when people look for companies, look for stocks which are under research, I think this could come on the radar.
No, Arihant Superstructures, got that, Amrish. I think we're almost out of time. Just 2 minutes to go before we close. Thank you so much for being with us today and taking us through all the picks. As I was just looking at the trend, this is a market that's been in an upward trend for 10 trading sessions now, with only 1 or 2 sessions where we've had a minor red close or maybe a flat close. But otherwise, this trend is now a 10-day strong trend. And not just that, the other thing to note is this week, guess which index has done the best? It's the micro-cap index. It's better than any of the others. It's even better than the PSU index or the CPSE index. So we have to watch this a little carefully because micro-caps are running, small caps are running all over again. And even today, you've got a flat close on the Nifty, a bit of a negative close on the Bank Nifty because of HDFC Bank. But the mid-cap index is shining bright with a gain of almost 0.7%. But anyway, I mean, we have to talk about large caps as well. And that last hour move, not even last hour, last I think 15-minute move by Reliance, that really takes your breath away. Almost 3% up, and that's not a small stock to be moving 3% in a matter of 10-15 minutes. That's a big mover. ONGC as well, 4.5% on the higher side. Some of the banks like SBI decided to do a flip. And SBI is going home as the third best performing stock on the Nifty. You had a couple of FMCG names like Britannia and Cipla, Britannia and HUL doing well. Cipla kind of added to it. So all in all, as we're looking at it on the gainer side, it's a very vibrant screen, Rima, very green screen when you're looking at large caps today.
Well, on the way down, it's only HDFC Bank, right, which catches your attention, down 4.5%. And now for the week, it's ending with a cut of about 2%. So all the enthusiasm related to the MSCI weight up and the fact that it's going to see passive inflows of $3-4 billion till August of 2024, all that disappeared. And HDFC Bank took a slam down 4.5%. Other than that, Titan Industries was down 2%. There was a Kotak downgrade. Some IT names like LTI, Mindtree, Infosys came in for profit booking, and even large cap private sector banks. The cuts were not deep, but ending in the red for IndusInd Bank and ICICI Bank. The bell has gone. We've wrapped up for the day. The day has been very quiet, but the mid-cap index closed up with a gain of more than 400 points at 0.7% rally. And for the week, the Nifty is up 1%, marking its fifth consecutive weekly gain, with the mid-cap index too shining bright with a 2.5% rally. We're going to wrap up in closing bell, but don't go anywhere because our very special editors roundtable comes up next.